Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market, the S&P 500, other macro indicators, as well as some of the magnificent seven stocks. Starting off with fear and greed, CNN was on the border of extreme fear not too long ago, but it has bounced back up into neutrality. And I'll keep showing you this chart, at least for the next month, maybe when we do these weekly stock market videos, that it is normal to expect the market, at least on average since 1932 presidential elections, that the inauguration can go sideways or down for about 100 days, give or take. Also, keep in the back of your mind that on average, the second year of the presidential cycle tends to be the most bearish. I think there's data that lines up with that. And when I show you all this data, we're trying to combine it together, see if there's some convergence, if the data is agreeing with each other, if it's telling a story, or if there's some disagreements. And either way, it's up for you to decide. The Fed, they will be meeting, I think, next week. And so far, all indications are they're probably going to rate pause. But since they started rate cuts back in September, we've definitely been seeing the stock market follow the non-recessionary trend from rate cuts. And part of the reason why is the Fed has been averaging 25 basis point cuts. Even though they started out with the 50, they didn't continue with the 50. They started out with 50, paused, and did 25 basis points, and then said they're probably not going to cut too much, if at all, this cycle. So that tends to be good, at least in the near term, the next year or so for markets. But when the Fed is cutting large and fast, that tends to be a time to really be concerned. Overall, the market, is it getting into bubble territory as far as the price earnings ratio? Yes, historically, but it's not in a super bubble or a extreme bubbly type of territory. So something to just, again, keep in the back of your mind or temper expectations. Maybe in the next year or so, you might see some really great returns. But some of this data, I think, might be showing that maybe in 5 years, to temper expectations and to look for where there's value, just like I talked about with fear and greed. I know many of you who are on this channel watch for my crypto analysis, and it's important to know what the stock market's doing, how it's affecting the crypto world. There is a relationship there. And right now, crypto is just staying on the edge of high greed, extreme greed. It was in this downtrend, lower highs, lower lows, possibly reversing that trend. So maybe we'll see some bullishness in Bitcoin moving above 110K or so pretty soon. On this channel, I also talk about altcoins that are on Coinbase and Robinhood, alt season, the crypto cycles, and Bitcoin mining stocks. So subscribe if you want to hear more about that. As far as the S&P 500 on the weekly, you can see that since, let me go back in time here, since the great financial crisis 2008, the market's been in this giant upward channel. And within that channel, you can see that on its way back up, also drew these parallel trend lines within that channel. And there is the 20-week moving average, I believe the 100-day moving average, and that parallel channel trend line. All good areas for a bounce and support. And even if we throw in a buy signal, you can see there's a buy signal on the weekly, and that is a good thing for the stock market. Again, each time, the last 4 times, the S&P 500 has hit the 100-day moving average, it's had a pretty good size bounce. The yen carry trade unwind back in August when there's a 10% correction did almost get to the 200, not quite, but it's been up for a week now and back into all-time high territory, 61.19. Now, as far as the other parallel trend lines within that channel, you can see that if the S&P continues to be bullish this year, we might see it get into the mid 6,000s or mega bullish and bubbly up into the 7,000 range. So something to keep an eye on. As far as the VIX, which is the volatility index of the market, the VIX has been coming down for a week. The market's been going up. So overall, the VIX is at a nice spot right now. Even looking at the weekly, weekly sell signal, VIX coming down. That tends to be pretty good for the markets. Going over to the percent of stocks that are above their 200-day moving average. We were watching this in last week or two as we've been talking about this. I said, here has been the average of the lows at around 50%, but even lower than that, we once got down, this was in August last year, to around 44, 45%. And that's what we saw with these candles and wicks. Now the wicks being bought up nicely, and we have a nice buy signal. So this indicator, this chart tends to be pretty good at showing us where the market might go, and at least looking sideways as far as the lows here showed that that could be a possible good area for a bounce. And so far, we're getting that buy signal on the weekly. Maybe we see some bullishness for the near term as far as stocks are concerned. One of the things to keep in the back of your mind, as I talked about 2026 and the PE ratios, and that's the yield curve inversion and uninversion. So this is the US 10-year minus the 2-year. And basically, when the Fed is cutting rates, when they're raising rates, that tends to invert the yield curve, but when they start cutting rates, it uninverts it. And when we've seen in the past, at least dot-com bubble, great financial crisis, it's been about 500, 600 days or so until we see the bottoms of the market. That's what I marked out in the red vertical lines. But I do wonder, with the yield curve being more inverted than it has in a long, long time, maybe ever, and for the length of time, are we going to see the recession in the bottom in 26, 27? Hindsight being 2020, but that's what's happened in the past. We'll see. Unemployment right now, that's been fine, and probably one of the reasons why the Fed is most likely not going to cut. Unemployment staying at low levels, not going higher. We also have inflation. Let's go over here. I may have to go to U.S. inflation, right? And U.S. interest rates. Yeah, it is interest rates, right? Well, that's just the interest rates and showing how they're cutting. As you can see, the Fed, they may pause here. I've been kind of comparing this to 1998, but inflation. There we go. I was second guessing myself there for a second. As far as inflation, it did have that spike up as well, right underneath or it's right at the 10-week moving average. So unemployment, good. Inflation kind of going up. So both causes for the Fed probably not going to cut rates because the third largest item on the Fed balance sheet is the interest that they owe on the debt. And the debt continues to go up. Another chart I saw someone post today is it US M2? Yes, the M2 money supply. So back when we had COVID, and this you can see right there the date at the bottom, February, March 2020, and we had all that printing going on. The federal debt was half of no, not quite half. It was at $15 trillion. All right, this is the Federal Reserve money supply. Right now, the debt is over 30. I want to say 35. But then during Trump's term, they printed about 4 trillion, give or take, out of thin air, and maybe even 5. And then by the time Biden came in, did the same. Hence, a big reason why we got inflation. Now, they've been tapering off the M2 money supply, but that has been going up again. When this went up drastically and spiked in the past, that was very bullish for markets. And right now, we don't see just a general money or a general trend up. We're seeing this curl up again. So if that continues, micro bullish, in my opinion, at least for the next year or so, macro worrying. So it sounds like, at least a lot of the talking heads say, that the U.S. rather have inflation than a crash or deep recession. Either way, if inflation does come back, just so you know, that tends to, at least in the past, coincide with market bottoms. But if inflation doesn't come back, then we take a look for those other recessionary indicators. Bitcoin, and then we'll go over to the Mag 7 stocks. We have the candle body creeping over the 1618 fib at 102K. As long as 102K holds, that's good. And next week, if we see another candle body staying above there, that will be very good for Bitcoin. Going over to the daily, we do have a sell signal, but a doji and wicked had good support off that 1618. So if this 101, 102K area holds for Bitcoin, that's very good. We'll see what happens here. All right, let's get into the Mag 7 stocks, and let's start off with NVIDIA. So NVIDIA from the highs, and for this one, we just drew from the most recent macro low to high. You can see here that got under its 236, came down to the 100-day moving average. There's also been some bullish news as far as the Trump administration and money they're putting towards AI projects development, starting with 100 billion investments from the government up to 500 billion, who knows. And so that's good news for Nvidia. So at the 100-day moving average, we talked about how that has been the bullish area for a bounce in the past. So yeah, we have good signs for Nvidia, but still very elevated. As far as Microsoft, it's been in this wedge that's been forming in a while. This fib I drew from the macro high to low, and it got to the 1618. And the reason I'm doing this fib here, at least with this fib target, is because there's a lot going on around it. So we'll see what happens at this 1618 battle in this wedge. And by the time things come to a head, are we going to see it spike up, get to the 2618, see Microsoft try to work its way towards 570, give or take, or are we going to see it break down and come back towards its former all-time highs at around 350? So if there was any sort of a pullback or possible mini recession, 20% pullback in the markets, you might see Microsoft get down to those levels. As far as Apple, we can see that, again, same chart or fib levels, fib chart, high to low. Got above the 1618, been bouncing off its supports, but Apple has been coming down all the way to the 1618 and the 200-day moving average. So might be a decent area to buy Apple if you do like Apple and you like the dollar cost average in no matter what. There's a couple of areas of convergence there. When we go to the weekly, we also have the 50-week moving average as well as this 1618. So possible decent area there. I'm curious how the stochastic's looking. And right now, yeah, you can see it's still falling, but we want to see that positive flip over, okay? Once we see the blue getting above the orange, tends to be in good range of the bottom. That hasn't happened yet. This can still fall a little bit more. Maybe get down to the two teens areas, but something to keep an eye on. Going over to Amazon, there's a positive crosshair, and you see that reflected in the candle. And let's put on our buy signal. Amazon, weekly buy signal, all-time high area, and the 1618. Next target to look for profit taking, probably around 256. And going over to Google, same thing. Now it's getting above the 1618. This is kind of like what we were looking at with crypto, with Bitcoin. The candle body's getting above. That's good. We want to see the 1618 get treated as support. You can see here that look at how Google respected the fibs, the moving averages. Came to the 1618, got rejected, came down, bounced off the 50-week moving average, as well as the former all-time high line right here. Came up, started forming this wedge, and when it broke up, boom, big move up here. So Google, if it is able to hold the 1618, the next major fib target area, the 2618, 260, if you can believe that. And then let's finish off with Meta. I'm thinking of doing a video just for some of the more speculative, popular stocks. I'm talking about Tesla, Palantir, SoFi. There's another one I wanted to take a look at. Escapes me right now. But anyways, wanted to do a special video for some of those other stocks that people really love to talk about. So going over to Meta, another high to low fib, got above its 1618, and it's been loving its 20-week moving average, looking good and strong. So the 2618 target for Meta is at around 862. So do not be surprised to see some good profit taking there. But Meta, man, this has been looking like one of the strongest Mag 7 stocks. Anyways, let me know what you think in the comments below about this various market data as far as what you feel 25 and 2026 might look like for the stock markets, the crypto markets, all that stuff. Thank you so much for watching. We'll do a live stream tomorrow, and have a wonderful day. Take care.